Oil prices are back up in Asian trade after recording double-digit declines overnight. At the start of this week, crude prices spiked above the $100 a barrel level for the first time in roughly 4 years. Those oil price swings have been hitting Asia hard as the region's heavy reliance on imported energy leaves it exposed to escalating war on Iran and resulting risks to oil supplies. WTO data shows Japan and the Philippines get almost 90% of their oil supply from Persian Gulf. China and India source as much as 45% of their energy needs there. A blockage in the Strait of Hormuz could cut oil supply, slow business, and strain manufacturing in these countries. Morgan Stanley says the region is most vulnerable to the surge in oil prices, with Europe and the US facing more moderate impacts. The top Wall Street bank estimates that a sustained rise of about $10 per barrel in oil prices could lower regional GDP by 0.2 to 0.3 percentage points. Japanese bank Nomura estimates every 10% rise in oil price increases the region's import bill. That means more money is flowing overseas to pay for energy, which drains funds from local economies, making it harder for countries to finance growth. Nomura says Thailand, India, South Korea, and the Philippines are among the most vulnerable. Asian economies also face an increased fiscal burden, leaving their currencies exposed to risks. Governments often shield consumers from global oil price swings through fuel subsidies, price stabilization funds, and state-owned energy companies. That cushions households but shifts the burden onto government finances. And for more, we speak to Lin Ye, the Vice President Commodity Markets Oil at Rystad Energy. Lin Ye, Asia depends heavily on imported crude. How serious is the risk of a real supply disruption through the Strait of Hormuz?
Yes, exactly. The closure of the strait will hit Asia the most, as Asia relies on the imports of crude oil and oil products through the Strait of Hormuz. So we are seeing a lot of countries in the region are taking measures to deal with the current situation.
Now, from your perspective, which Asian economies are most exposed if flows through Hormuz are disrupted for a longer period?
Yeah, so apparently China and Japan are in good positions, as these two countries hold a lot of crude and product inventories, which could potentially cover 5 to 8 months of their import demand. And India could benefit from Russian crude in the short term. But countries like the Philippines, Vietnam, and Australia could really face not just crude shortages, but also fuel shortages very soon, because they rely on higher level of fuel imports from other countries. And now countries like China and Japan, South Korea are exporting ban their oil products. So that means countries relying on their exports will suffer from the immediate fuel shortage.
Now, as we see governments are moving with subsidies and price controls, how effective can those measures be if oil stays elevated for weeks?
Yeah, we have seen many countries in the region taking measures. For example, Thailand and the Philippines are asking government employees to work from home to conserve energy. Thailand also plans to increase the use of biofuels to reduce the demand for crude and oil products. Vietnam appears to curb their crude exports as the government tries to prioritize the feedstock supply for domestic refineries. And South Korea plans to implement a price cap on domestic gasoline and diesel. No doubt, all the countries in this region are trying to prioritizing their citizens over industries during the times of shortage, but industries are taking the hit right now, and that will ultimately affect economic growth. And in terms of the effectiveness, it largely depends on how long the strait stays closed.
Now, looking at the fluctuation of crude oil prices right now, does this remain mainly a price shock, or is there a real risk of a broader supply crisis for Asia?
So according to our assessment, if the Strait of Hormuz stay closed within a month, so let's say it could reopen by end of this month, then probably it's just a price shock. But if the situation continues, then it will quickly shift to a physical fuel shortage for a lot of countries in the region. And of course, some countries can, buffer this disruption through their inventories and also some measures to disrupt demand at this moment. But if it lasts longer than a month, then all the measures won't be that effective anymore, and a few countries will face immediate fuel shortage. Then all the measures needs to escalate in the region to tackle.
Now, what are the implications should that happen? I mean, which region is most vulnerable? Would you say Southeast Asia perhaps is most vulnerable to that?
Yeah, so the countries of the Philippines, Thailand, and Vietnam, they are relying on imports of fuels. And since a lot of the exporting countries are now banning the exports, so that means they can no longer purchase fuels from those countries anymore. And if this situation continues, then these three countries that I mentioned will suffer. And also in the APAC region, we think Australia will also be very vulnerable because it has closed two of their refineries in the past years, so that they rely on the imports of fuels from other countries. And we saw that the US exports some barrels of gasoline to Australia to support with the short-term demand. But if it lasts longer, then these countries will be super vulnerable.
Well, many thanks for your insights. We've been speaking to Lin Ye. She is the Vice President, Commodity Markets Oil at Rystad Energy. Thank you.